Ira Epstein with your financial market wrap-up, and this wrap-up is for Monday. And this is August 29th, 2022, time about 5:45 p.m. Central Time. You know, I feel pretty good. Was it 2 weeks ago or so when you were coming up to the combination on most of the stock indices of main moving average? In many cases, it was the 200-day average, I take that back, with the upper Bollinger Band. I said, I think you're making your trading top right now. We've already got the bottom in. And that was the June low. And I certainly can look back on it and say it was a great call. And it was. I don't always make great calls, so I'm not patting myself on the back. But I have another one that I want you to start thinking about. The month of September is one of the worst historical trading months of the year. On average, if you go back 100 years or so, I think it ends up with about a 0.6% point loss. But it's a losing month, so something you want to keep your eye on there. But as I'm looking at it, I think the whole key now is, do we make a run to the June lows or do those sit? If they sit, I don't like being bearish into year end. That's often when the markets give you a bounce. So just things to think about. Very important things to think about. The headwind, of course, is going to be the Fed. I am a person that believes that you trade with whatever the Fed wants to do. And I think this Fed chair, Mr. Powell, has made his historical statement. Now, let me explain. I don't think he'll get another term as Fed chair. So I think he's looking at what did he do there, how did he do it, and he realizes that people talk as he did about Ben Bernanke, Paul Volcker, what went on, and he mentioned inflation 46 times in 8.5 minutes. I think he's telling you what he's going to do. He is not the dragon slayer. He wants to be the inflation slayer. Does he have enough time in his term to do it? He does. Will he do it? You bet against him. I will not. I think that he's already told you there will be pain. Those are his words. That you have to beat this inflation back down. What does that mean? Well, that's where the real part will come in. Is a 5% number in inflation enough? Don't know. We're going to get jobs data this Friday. What do you think they're going to be? The guesstimate's 325,000 jobs. That's still a big amount off the 528,000 last time. So the jobs keep inflation going. The more that people go. I have a great friend that just took a job and he had a big job here in Chicago in finance. And he decided he wanted to move to Florida. And they're giving him a 30% increase. He already has a great salary. And then he gets all the other benefits. So he's moving lateral, but this is what people are doing. They're still paying up for talented people, is my point. So people that want to get work, they can. You know, if you're like me and you're watching the people on the streets in Chicago, the homeless as it's called, they can get jobs. So I'm irritated because everybody still has help wanted signs in the stores. You drive by bulletin boards, the billboards, help still wanted, welders, this, that, not all skills, by the way, dishwashers. People have to get it. Not everybody's mentally healthy, and I get that, or physically healthy to do it. But there's a number that are, and they just ride the system. All right, enough said with that. So where do we go with everything? Well, let's go to the work here and see what we've got. You're back to 102 here. Whiting, Indiana, on Friday, had an outage at the plant. It services Illinois, Indiana, Wisconsin, and Michigan. The government stepped up and said, we're going to take variances on your gasoline production away. So now you can get more variables. And I don't know how much they're losing in the production. But it kicked back up the gasoline market. You went from the 262 to 271 level. I don't think it's Labor Day driving. I think it's the combination of Labor Day and losing a key facility in the Midwest. There aren't that many, remember, refineries. We don't build them anymore. So this is a big event. Bonds and notes, all right, they got down to the point where they're hitting some Bollinger Bands in some key areas there. I get that. When we step over to the metals, sort of a mixed day. Copper saying anything in the 370s is high right now. And a little bit of a bounce after a monster 2-day break in stock indices. So what do we do with all that? So let's go to the charts and see what it's saying. First, in the weekly area chart of closes, you're pulling back to your support zone. 40-12, the 18-week average, is the line in the sand on a weekly chart. When you're over it, you have upside bias. When you're under it, you have downside bias. It's a filter on other technical tools. You're pulling into the support of it. When I come to a daily bar chart here, you can see how the market has slipped back from this trade top at 43.20. We are down about 8-9% at the 4,034 level. You can see how the break set in. When we put on these key numbers, remember this year 200-day average, look where the Bollinger Band came in with it. It's where I was sticking my neck out here and telling you I want to stick it out. I think you're making a top. You made that trade top. The trade top is in. The June low is in. Does this market have the power to go from there to there? I was watching Cramer just before I came on, and I watched Bloomberg at certain parts of the day, and then I switched my gears over to CNBC and I watched Cramer. And he's telling people buy. That one of the famous chartists he watches, the gentleman I'm not going to mention, by the way, is saying that the stock market is following the pattern of 1891. You might want to take a look yourself. I saw what he saw. But they're just patterns, folks. The world was different then. Doesn't mean the pattern won't work. It's fun for people to do that, I guess. I look at it this way. The market has peaked out. The question is, does it have legs to the downside? And when you first hit a Bollinger Band, I tell traders that's where the pros are going to cover shorts if you're not embedded. And that's what I think is going on. I think there'll be another sell opportunity. I think the market in between, somewhere between the 100-day average in green and the 18, I think will be the sell zone in the market. It either embeds, and then I get very aggressive on the downside. And this is embedding bullish. You haven't had a bearish one, but if you get it, I get very aggressive on it. In the NASDAQ, oversold down to the combination of the 100-day average and the Bollinger Band. Up here, you never did hit those key numbers, the Bollinger Band and the 100-day average. It's the only one of the indices that didn't. You did it here in the Dow. That's what I told you. I thought you're coming down. You're now oversold. And again, you're down to the lower band. So I can make the argument short covering could hit this market. Tuesday reversal, big decline off Friday and Monday, a follow-through decline. Why not? I don't see a trend change. I can see a bounce coming in the market. And I still say somewhere between the 100 and the 18 is where I'm going to be looking. Russell, same thing, 200-day average, upper Bollinger Band. I was here saying it to you at that point, and down. So I stuck my neck out, and knock on wood, it didn't get cut off. I'm very happy about that. And, of course, when you go to the VIX, and that'll come up right now, I'm refreshing the chart as we talking. You're up over the Bollinger Band and stalling out now at the 100-day average of closes, overbought. Not a place to do anything. Do the pros go short up here? That will be the question. If they are, they're going to look to get back down first, not to the 18. They're going to look first at the 24.75 level, and then can they make it to the 18. But the real goal when you hit the upper Bollinger Band is the closest moving average under it. I don't think anybody was going through the Friday report from the Fed chair. In the bond market, I'm still in the bear camp. You've got a market that's declining. You could get a bearish crossover. The market's getting very close to doing it. It should happen about midweek, I would think. 139.17 to 139.3. When that happens, another bearish moment on this chart. I look for the pros to be selling the rallies tonight and tomorrow. And out, if the red line closes over 21, it's at 11. When I come to the 10-year note, it's the same pattern, and you had the bearish crossover. So I am still looking for the market to make lower lows. Now, it's not the ideal crossover pattern in this sense. Today's low is already the lowest low of the move, so what's the target? Yeah, I know the Bollinger Band, but the lower low is normally the target. Taking out some number under you, you don't have it. I do think regardless of what happens, how much you rally, big resistance shows right up there into those 118 area, as you can see. In the dollar index, all right, higher lows. Now I'm going to have to take this arrow and move it here. Higher highs, higher lows, bullish embedded reading. If on these bullish or bearish readings you lose them on the embedded part, then I look for a bigger correction to take place. Without them, it's telling me tomorrow I will be telling my clients, buy the break. There's a certain way that you do it. If you've taken the enhanced Bollinger Band course on our website, you learn that. Remember, iraepstein.com, under the word education. It's all explained. And you can see that pattern is there. Eurocurrency, same thing, or is it? Yeah, you're still embedded. So I think the pros are going to nibble into the short side. Now, this is the rest of the week nibbling. What do I mean by that? You're still going to get a lot of people going on vacation. We're not open on Monday other than the electronic markets, and the volume's always very thin. It's our Labor Day, right? Please trade small, not big. That's what you do at times like this. Doesn't mean you don't follow the patterns. You do, but you trade small because you get more slippage than you think, get knocked out of things. Okay, so you're cutting down. If you're a 20-lot trader, you're a 10. Give me an example. If you're a 2-lot trader, you're a 1-lot trader, whatever it is. And if you're a 1-lot, be sure you're trading those mini contracts, okay, or micro. Macro in this case. They're all different sizes now. In the British pound, you have an embedded reading on rallies. I'm going to be telling my clients to go short this market. I know I'm putting out the updates tonight, what I'm doing, and where I'll be doing it. Bitcoin, trying to break out further to the downside, but 20,000 seems to be where it's at. Now, somebody was pointing out that this market, and I'm not quite seeing what they are, they're claiming it's moving in $10,000 increments. I don't know that I can see that. They're saying here's the 30, and then it went down to the 20. I don't have enough data here to see what it did from that 69,000 all the way down. But it's an interesting concept. Gold likes to move in $25 increments, so it's not unusual. Now we get to November. Brent versus November WTI. I've changed the contracts on you now, so it's now time that you follow this. You're widening out. And why? Nobody knows if Iran is going to enter with the United States back into the nuclear treaty deal. I am against it. I've said it. I don't think you can trust the Iranian government for anything. I think Biden's legacy is dead if he goes back into this treaty. Today, Iran turned on another 134 centrifuges, higher performance ones. It's got 3 clusters of 134. It turned on one, another one they're doing some cleaning with, and another one they haven't told us what they're going to do. And you think this is all for peaceful nuclear facility. They're watching Russia with the finger on the button. That's why nobody's attacking Russia. You want that now with Iran? I don't know that you can stop it, but you don't facilitate them. Did any of you read how much money Russia is taking in on crude? It's as though the war never happened to their war chest. Because the price of crude is staying so strong and they've increased production, and you've got countries like India, Korea, China buying all they can get at these prices from it, their coffers are full. You heard me, full. They're running out of soldiers, but their coffers, they're bringing in money left and right. Now, what do you do with an Iran like that? They see the model. They're going after it. You want to help that? I'm sorry, I realize Europe's got a terrible issue. Having Iran with nuclear weapons is worse than that. November Brent, higher lows, higher highs, big problem up there as I see it. Not a market that I would certainly tell a client to buy a Bollinger Band in an overbought condition. And same in WTI. There's nothing to be bearish on, but there's reasons to take money off the table. And then on the breaks, the traders will start looking at that again. I've explained the gasoline story as to what happened. So you read about Whiting, Indiana, you'll get the whole story there. And in nat gas, I don't know if you watched what happened. You were down 20% in nat gas today in Europe. You do realize that that can break a brokerage firm. I mean, you get people piling in, they get one-sided. A 20% decline on a 90% leverage can kill firms. But that's what did occur. I haven't heard what the fallout is. I know I've owned stock and commodity firms. Folks, I know this game. And I know what happens. You're staying overbought. It's a very difficult market for me to tell somebody to be a buyer in right now. Now, I did also hear that Germany is saying that ahead of schedule, they are really starting to fill all their storage tanks for the nat gas that they need. That would be phenomenal. Europe needs to get ready because Russia's going to be rougher than ever in making sure they don't have the facility from Russia to make it through a cold winter. So they need to do this now at any price. Fill them up, deal with the inflation later, get your storage tanks full across Europe. Anybody that gets fuel from Russia has got a big problem. Now, we also know that from time to time, a lot of you like to learn different things. And with our friends at Modern Trader, we had technical trading tips from the top pros. This is a reprint. We made it into a PDF version for you. It talks about relative strength, money flow, rules for bottom fishers, which most of you guys are. You know, I'm amazed at how many people, instead of trading the trend, want to pick the top and pick the bottom. And of course, it can't be done. You can pick zones, but you can't pick the top and the bottom. I can't do it, and I'm probably better than most of you. I don't know anybody that can. But you can ride trends, and trends are the whole thing that you want to do. So this explains those concepts. We have other booklets that go with it as well. How you get it is you go to our website under free offers, or just take your cursor, move it to the top of my head. Wherever it's up there, what are you going to get? You'll see an icon come up, give it a click, get what you want. I'm Ira. You have a good day. I'll see you tomorrow.